The Italian referendum result itself was what the markets were bracing for, but it was the size of the rejection that was the headline, and most Italian banks remain lower on the day. What will the ECB make of it, though, come Thursday's rate announcement? Or Wei Li, head of investment strategy at EMEA, iShares, BlackRock, joins us now. Wei, welcome. It's not just the Italian banks, it's not just the ECB, but it's also the euro as well. Let's take Italian banks first of all. Down on the day, remaining down. They're the laggards in the European markets, which are turned around. What should we make of this referendum for Italian banks?
I think in terms of the relative underperformance of Italian banks versus the broader banking sector in Europe, as well as versus the broader equity market, it is hardly surprising because reform after the outcome of the referendum is likely going to stall, and that would have direct ramification in terms of some of the some of the recapitalization asset raising effort on the Italian banks front. So the fact that the markets recognize that is going to go a bit more slowly is translating into the underperformance.
But the recapitalisation they need to go through, they need to raise money. If they can't raise the money, if they find it difficult, if there's a squeeze on Italian banks, is the ECB the backstop? Are they going to be able to do what they can necessary to help Italian banks, or will we see some banks go to the wall?
Well, we have seen ECB acting a bit so far this year, but still having some ammunition to act more if needed. So there definitely is dry powder there. But if you look at the relative performance of European assets after the surprising referendum magnitude of no vote, is actually not showing a significant degree of stress, which makes us think that the ECB is not likely going to react specifically to the outcome of the referendum or the situation that Italian banks are currently finding themselves in. Of course, we still have a few more days until the ECB meeting, so should the situation exacerbate, which doesn't look very likely right now, then we could see potential action, but right now that is not our base case.
How would we measure that exacerbation if the situation does worsen? Is it about the share price in Italian banks? I mean, you only got to look at the euro to see where the markets are looking at the euro project overall. I mean, we're now up on the day at over 107 on this hourly chart here. It's an amazing recovery on from the early volatility that we saw. I mean, what's the ECB going to make of all this in the context of their plan ultimately to taper QE?
Well, what we have seen so far this year through the major political events, we have Brexit, we have US election, and now we have the Italian referendum. One pattern is very clear, which is that markets initially sold off because of the surprising outcome, whatever it was, and then quickly recovered. And as we kind of progressed through the year, the speed of recovery actually picked up. We saw it with US election markets recovering faster than the Brexit referendum, and now Italian referendum markets recovering even faster than US election. So I think with that pattern in the background and also on the minds of the governing council when the ECB meet, I don't think they feel significant amount of pressure to act more. But to your point about taper, that has more to do with kind of the fundamental outlook of the European kind of economic recovery, and also the reflationary trend that we're currently seeing in developed market in particular, but also specifically in the US and somewhat in Europe. That is going to dictate more than political outcome in terms of the pace of taper. What is more likely to happen in our point of view is actually they could extend the program for 6 more months at the meeting this Thursday, and then potentially talking about taper later next year.
And of course, one thing we don't know about is out of this is the fact that where Italian politics are going. With Brexit, there was an end game, and as much as Article 50 was going to be yes, we had a new Prime Minister in the interim. Donald Trump, well, he's new to the White House, he's got new policies and so forth. We don't know what the political ramifications of this is going to be in Italy, and whether or not there's going to be any contagion amongst other European countries next year, with France and Germany both going to the polls. Of course, over the weekend we saw a pullback from the far right in Austria, which was a relief to many, I know. But it remains presumably a very fragile and febrile situation.
It's quite uncertain, especially in the near term. There are two potential outcomes in terms of kind of the formation of the new government. Either we have a caretaker government being put in place by the president, or we could potentially have a snap election. But given some of the opinions having been being voiced after the referendum outcome, it would appear that most of the people concerned would try to go for putting in place an interim government with a smaller mandate rather than calling for snap election election straight away. So our base case remains to be that some sort of interim caretaker government being formed before, and also electoral reform being carried out before we go to the next election in Italy.
Yes, I just want to go back to the euro chart if we can, because I want to talk a little bit about parity, which is what a lot of people are talking about. This is the chart that we've seen. This goes back to 2014. It's a very long-term chart. The red dotted line here is parity. In this chart, it's not very far away. Is that a reasonable base case, or is there enough energy now and need, I suppose, really by the ECB to inject the right sort of policy to keep euro up? Or does the ECB not mind if it goes to parity? Is there no longer a need to keep it up here?
I think parity is a psychologically important level, but the direction of travel is even more important in our point of view. And given where the central bank policies are heading towards in the US versus where the central bank policy is heading towards in Europe, it's more likely that dollar could gradually strengthen, and if it would test parity or not is still to be seen. But I think for now, kind of softer euro is not particularly stressful for the ECB in our point of view.
And of course, that other side of the coin is as you say, the US and the interest rate decision on the 14th, which I understand is now a done deal. We're going to get an interest rate rise from the Fed.
Well, it's fully priced in by the markets, and to be honest, given where the inflation is heading towards, and also the degree of domestic economic recovery in the US is looking like right now, it would appear that December is likely going to bring forward another rate hike.
Yeah. Okay. All right. Wei, thanks indeed there for joining us. Wei Li, Head of Investment Strategy at EMEA, iShares, BlackRock, joining us here with a look at the afterflow, the immediate afterflow from the Italian referendum, where the majority of the no was the only real surprise, and the size of the vote against Matteo Renzi.